portfolio currently. One or two additions have been added. I'll go through them briefly. There are quite a few. I believe there's 69 positions that we have here. First one being Aberdeen, slightly down. Well, so slightly down, considerably down. But again, I find this very hard to understand. That is a particularly decent stock. I believe they're the backbone to standard life insurance. However, as I say, they are worth having in your portfolio. This one today is struggling slightly. This is a REIT, I understand. And as I say, I've had it for a while. Their dividend payout has been fairly consistent over the months. AGNC, yep, this is a considerably decent monthly payer. But again, it's a big risk. I've got much more in there than I'm comfortable with, but it does pay out nicely per month. Airtel Africa, Okay, moving on. This particular ETF was one that was given to me once a previous stock was given to me. It was actually exchanged insofar as a previous stock was deleted, bought out, and this is what I got in return. Not bad at all. Okay, this is a US stock market based Canadian energy company. It's not really done that well. If it comes up to breaking even, I'll get rid of it, but again, as you can see, I've not exactly got a fortune in there. Annually Capital Management, yeah, worth having. That always yo-yos. There is commercial real estate, not much in there that at all, for the reason that it's fairly volatile. Armour Residential REIT, what can you say about that? Lost out a lot with reverse stock split with regards to the share price, but again, it does pay nicely per month. Aviva, always nice to have, an insurance giant. B2 Gold, yeah, there's a bit of an FAFO choice of mine with regards to wanting to hold a stock in a gold mine or a gold company, and again, that's the price you pay is almost down by half, but never mind. Barclays, always good to have. Bluefield Solar Income Fund, I went quite big on renewables, thinking that it is the way forward. However, as I say, these have had, with regards to stock price, a fairly worrying history with regards to retaining its price, but never mind, they pay regular dividends, and that's what I'm in this for. BP, yep, never good, down considerably. Bright Spire Capital, another BDC, I believe. As I say, it does sort of yo-yo a bit, but again, it pays regular dividends. British American Tobacco, most of us have got that in stock in their portfolio. They pay very well. The yield is extremely good. British Land, yeah, that's been better. Last week it was in the green, but this week, there you go. BT Group, always disappointing, but yeah, I'll hold that for the considerable future. Capital and Regional, another BDC. Another REIT there below it, Custodian Income REIT, yeah, nice payer for dividends, but again, it's not really a sensible stock. Diversified Energy, they pay considerable dividends, but again, I see them as a volatile stock. That was a punt recently. That's a Canadian particular stock, Diversified Royalty. And again, I just got a small opening position in that. It's showing in the green at the moment, but it does yo-yo. Dr. Martens, always, sadly, a disappointment. Down considerably on that one. Dunelm, good stock to hold, I believe. It's a biannual payer. But again, yeah, as I say, it seems to be doing well in this internet age. Dynex Capital, another BDC. Doing quite well for itself, but again, yeah, the price does yo-yo a bit. Another BDC, Ellington Financial, and again, they pay fairly regularly. But as you can see there, the stock price is fairly volatile. Another one of the renewables, Foresight Solar Fund, does pay, as I say, reasonable dividends, so I'll hold it. But that one there, I believe, is QYLP. It's holding its own with regards to, as I say, stock price, and again, it's a regular monthly payer. This one below is SDIP, and again, way too much in there, but again, it does pay a reasonable amount per month, and that's what I'm in this game for with regards to dividends. Greencoat UK Wind, yep, another renewable that's the stock price is taking a beating, and again, I've got way too much in there, I think, given what could happen to renewables in the coming years. GSK was a nice one to hold, but again, the share price is not doing too well. HSBC, yeah, one of my favourites. Share price is doing fairly well, and again they pay reasonable dividends. i3 Energy, at the time of recording, this one, I believe, will shortly be overtaken by a company. I believe they're called Gran Tierra, a Canadian Calgary-based organisation, which are buying them out. And again, I'll find out exactly how much I'll get for my shares within the coming days. But yeah, quite disappointing. Quite, as I say, just really a silly decision of mine to go into it. But again, I do that fairly often, and I believe I'm finding out.
But I'm going to go with my instinct on this one.
Okay, down to Invesco, a recent purchase of mine, taking a small punt into that. Invesco, obviously the parent company to the, how can we say, the company that administers quite a few ETFs, i.e. the one below it. But yeah, share price is not doing too well, but it's reasonably priced, so I thought to have a go. Invesco S&P 500 high dividend. But rather than going down the Vanguard route, I thought I'd try this particular outfit. I believe their TER is slightly more affordable, but again, at the end of the day, I've not got much in there. It's not going to make much difference really, but doing quite well for itself. iShares UK property, again, that has been better. Moving on, J Sainsbury, their price is surprisingly volatile. As I say, I would have hoped would have done better, but they're holding in. They're nice to have. Legal in general, they're always nice to have, but again, the share price also is taking a bit of a beating. They pay good interim payments, so again, it's worth having their stock in your portfolio, as far as I'm concerned. Right, Lloyd's Banking Group, yeah, not too bad at all. As I say, for what they are, they're holding their own there. London Metric Property, another, I believe, REIT, and again, pays out fairly consistent dividends. M&G, another UK finance company. Now, they're definitely worth having in your portfolio. They're a sensible stock with regards to their finance operation. And again, they pay fairly consistent dividends too. Medical Properties Trust, yeah, done nearly half on that one, 48%, but never mind. As I say, it's not a fortune. Mobico Group, this has always been disappointing. I've recently sold half of my holding in that at a loss, sadly. I don't like to do that, but again, I'm just so sick and tired of this one just limping along. National Grid, big disappointment. Again, many people swear by it. I don't really see the need to have too much in that one. New York Mortgage Trust. Now, this one, again, is almost down by 40%. As I say, it's a nice, UK, American REIT as such, but again, it seems to be ailing. Nordic American Tankers, quite a volatile one. Again, a recent, good dividend payer. And again, that's the reason it's in there. Orchid Island Capital, another BDC. Yeah, again, price is volatile, but again, I believe it's a monthly payer, so that's why I have. OSB Group, a UK-based banking corporation. They hold, as I say, interest, or they're wholly owned companies such as Kent Reliance Building Society. Again, it seems to be doing quite well, so I've taken a small gamble on that one. Oxford Lane Capital, I believe most of us have this, a nice monthly payout, seems to be doing well with its share price currently. Now, in the Oxford series, I bought into their Oxford Square as well, not doing too well, always limping along, but nonetheless, it's still a monthly payout. Paragon Banking Group, I believe they are in cooperation with the Revolut Bank as such, and again, they are the security point with regards to your savings. If you save with Revolut, I believe the UK customers have their holdings with Paragon Banking, doing quite well. Pfizer, disappointing, and again, they're always subject to some form of legal action. Again, I believe that is represented by their share price, but they're a quarterly payout. Phoenix Group, another one, which is a good UK finance company. It's not a BDC. This one's a sensible one. I believe they're interested in so far as pensions and so forth, so well worth having. Primary Health Properties, yep, a health-based BDC. Sorry, REIT as such, doing quite well. Prospect Capital, BDC. Redwood Trust, BDC. Renewables Infrastructure Group, and again, it's part of my fleet of renewables, and again, this one's never done well really, but again, it's in there. Rio Tinto is always worth having. Yeah, their share price is volatile. Most people describe this as a cyclical. It's a mining company. They have interests throughout the planet as far as I can see. And again, they pay decent dividends biannually. Schroeder European Real Estate, never done well. Moving on, Serica Energy, another volatile stock. Bought into that one, taking a very cautious approach to that. Their dividends, for what they are, quite high, so it's worth a go to see how we get on. Shell, yeah, just about bobbing along there. Nice to have, quarterly payer. Supermarket Income REIT, as you can see by the grand amount that I have invested in that. This one is another FAFO stock. It's a UK REIT. And again, I don't think I'll go too high on that. It's paying pennies per quarter, but again, it's worth a go. Tesco, always disappointing, recent dividend cut, but again, in the green. So most people, as I say, that are in it for the growth aspect, consider this a good option. Triple Point Social Housing, otherwise known as Soho, another one of my recent acquisitions with regard to an FOFA stock, should I say FAFO stock. And again, for those of you that don't know what that particular acronym is, search for it on the internet. I'm not going to say it and get myself a strike from YouTube. Okay, so yeah, onto this one. This one, I believe, is SMIF. They pay monthly, and again, I don't believe I receive any more than about 56 to 60 pence per month. But again, it's nice having it in there. The share prices stay consistent, and again, I'll just leave it bobbing away. Unilever, good sensible UK stock, but again, my lowest yield stock. I believe it yields biannually, or should I say, yes, it is biannually, 3.1%. So it's the lowest yielding stock I hold in my portfolio. I will not hold anything less than a 3%. Anything less than that, it's just not worth it. So, as I say, that's my reasoning for having that, because it's a sensible stock and I've got a sizable amount invested in it. Okay, United Parcel Service, another recent acquisition. Again, in this day and age, the gig economy and so forth, everyone ordering things and so forth, I believe these parcel companies, especially a conglomerate like UPS, is well worth investing into. That was borne out 2 weeks ago. The share price went up, and it was in the green by over £1, but now it's come down to something more sensible. I'll hold it, and I'll gradually add to that, because it's worth having, and I don't see them going under anytime soon. My only current Vanguard ETF is my TSE 100 ETF. I believe it's called VUKE, and again, it's not the biggest payer, but it's sensible and stable. Vodafone, never enjoyed Vodafone. They are a high yielding stock, but again, they're in trouble. I believe their business model is not what it should be, but again, that's above my head with regards to go into that. If you wish to have individual stock analysis, if you're using Trading 212, look at Flyleaf. He does extremely well with his stock breakdowns. Right, okay, moving on to the meat of the situation. Onto my dividends. Now, as you can see here, the starting today with regards to today's dividends received, you can see it's £3.86 overall since I've been trading with Trading 212, which I believe is in April 2022. This is my grand total so far, so I'm doing quite well, I think, for the holding that I have. Looking back, you can see here what I'm expecting, what I have had coming in. So we'll go through October and I'll show you what's the situation there and how they pay. Give you an idea of what the expected yield would be. And as you can see, Phoenix, biannual pair, nice to have. This one here, I believe, is SDIP. They pay quite nicely, but again, I have a lot of money invested in that. So, as I say, I would not class it as a sensible stock at all. It's if you want to try and get as much coming into your account as possible by taking maximum risk, then by all means go ahead and do that. But I would not recommend that to people that do not like risk. Okay, moving on. As I said, Oxford Square Capital, that's the one I mentioned earlier in the Oxford series, and again, it's quite a low amount to receive there, but I've not got much invested, but it does pay monthly. ARR, I'm a residential REIT 377. I receive that monthly currently. Orchid Island Capital, 79 pence, nice in there. New York Mortgage Trust, 84 pence. Ellington Financial, 60 pence. Prospect Capital, 41. M&G, as I said, quite a sensible UK stock, £2.27. Aviva, £2.04. As you can see there, I'm not going to mention too much with regard to the totals. Hopefully you can see that clearly on the screens. Right, okay, going through there. That's the other Global X ETF that I have. I believe that's QYLP. Paying nicely monthly that particular amount. Okay, these are the also rans that are holding my stock apart from GSK, which is a nice one to have, but again, fairly low yield. AGNC pays me that every month, £4.52. And again, London Metric Property, I believe that's a quarterly payer, £1.46. And down to the beginning of the month, Huntington Bank shares, held that for a while. It went a few pence into the green, got rid of it. It wasn't really doing too well for itself, and I didn't have much of a holding. Okay, Dr. Martens, yeah, pitiful, but again, nice to have. Dynex Capital. Okay, well, that will conclude that aspect of it so far. But again, that's effectively what's happening insofar as my current positioning in Trading 212 up until the mid part of November 2024. Right, okay, well, first and foremost, thank you very much indeed for your interest. Again, this, and I will make this very clear to you, I have quite a high tolerance for risk. As I say, with regards to my, particular way of investing, I would not recommend many of these shares for anyone that does not like risk. As I said, you must do your own due diligence with regards to these stocks and shares. By no means is my approach scientific, and again, I class myself as a hobby investor, and as I said, I could be doing a lot better if I put more thought into these. Again, a lot of these are emotional buys as such, but first and foremost, thank you very much indeed for your attention to this today, and hopefully I'll put another one out in the not too distant future. Right, before I finally close, I thought it'd be best to just give you a quick breakdown of what I've actually earned over the past year as such. Now, as I say, hopefully this will come out clearly on screen. This is a very crude spreadsheet. Again, it's not my forte, but again, it will give you an idea of what I've been receiving over the past year. I've been trading trading 212 since April of last year. And as I say, these are the listings for the monthly totals that I've received to date. Now, again, bearing in mind this represents the figure to November. The December total is estimated using Dev Tracker, the one with the palm tree. But again, yeah, £642 with regards to the dividends received. Now, that's not bad, really. As I say, it is not bad for the holding that I currently have, in my opinion. However, as I say, I do like to make it very clear, I have a high tolerance for risk. At any given time, my portfolio is running at an unrealised loss of between £200 and £250, sometimes more, sometimes less. But again, I'm in this for dividends. I'm trying to find a happy medium with regards to what to get there, but that is the total for the dividends received throughout the year of 2024, and I believe the December figure is fairly faithful with regards to what to expect. We're looking at just over £50, so thank you. This is a chart, a graph really, of new money in. As I said to you before, I am a hobby investor. I can only put in what I can afford to put in. This doesn't include the dividend amounts. This is, I'd say, the amounts that I've either transferred in or I've been able to afford to put in from my, as I say, funds as such. It can vary, as you can see there. The amounts can be as low as £20 in a month period. I do rely on the dividends to keep the portfolio going with regards to reinvestment. But as you can see along there, £20 in February. Moving along to August, only £24.16, and again 26 in October. And to the date where I concluded this video, it was only £2 in. That's gone up a little bit. I've added a bit more today, but again, only by a few pounds as such. So this is how I fund my particular portfolio. As I said, I'm not putting a fortune into this. The total there, hopefully, if it's not sort of well, if it is visible on your screen, is £459.36. I do add a caveat to this. There is some degree of how can we say error on this, because I took the information from my mobile phone app, Trading 212, and again just did mental calculations with regard to that. For me, it's never a good thing, but I don't think I'm far wrong with regards to the amounts that you see there. So as I said before, in comparison to many others on Trading 212, this is chicken feed. But again, I'm comfortable with this. I'm not going to put in sizable amounts that, as I say, I would be very uncomfortable to lose. And again, I urge all of you to obviously do what you're comfortable with. Right, that does finally conclude it. Thank you.